what you need to succeed. I can't emphasize enough, even though we've been emphasizing numbers and metrics and so forth. How you walk into the lender's office matters. Exude confidence. You are your best salesperson for getting cash for your company. Sometimes I've been amazed at what business owners have been able to get away with from lenders, all because of how they presented themselves. I'm not saying false bravado or saying that you have invented the most unbelievable blockbuster product. That's not what they want to hear. But a confident persona of somebody who is in command of their business is the way to work well with lenders. And to check yourself, how are you talking about your business? What's really hard is a lot of times when we need loans, we're in trouble or something's not going right. Is that the time when you need that loan the most to go in crazed and frazzled and say, if I don't get this money now, I could go out of business? What do you think the lender's going to say to that? No, that would scare me. Like, this is a business owner out of control, so you don't have to advertise it. But you could say, gee, we're getting more customer activity than we projected. With a new credit facility, we can accomplish this. So you're turning a little bit of peril and trauma and turning around, you're managing, you're dealing with the situation with the lender as a partner. You can take the same approach with investors as well. But don't go in and fear doom disaster. You will radiate that, and that will repel them. So you can be a part of your success. They want managers, steady, confident managers. That's perfect for lenders. Go in and even look like them, you know? Act like them. Talk their language. They'll feel more comfortable with you. Another key thing, when you get loan applications, so if you're doing an SBA loan application, again, that's a different application than just a regular bank application. They look similar. They ask for similar things. It's just a different form. Some of the fees may be different. I'm reminding everybody. But how about this? Let's not make any mistakes on the forms. Let's add our numbers. Let's fill in all the blanks. Because if you don't, they'll say no or delay. And that, again, what impression does that give? These are small things, but it's all things that we're capable of doing well. And most of these applications have really user-friendly language. A lot of the deal terms that I'm talking about don't show up in the applications, but they show up in the loan agreements. Yeah.
I'm certified as a woman-owned business through the PUC, but there's a lot of other certifying agencies. How much does credibility does that type of thing count for an application?
In certifying, let's clarify what that means. So I love it when you apply, even if you're applying for government contracts and stuff to certify as a women-owned business, a veteran-owned business. Here's where I go. The lowest cost certifier. Because one certification is no better than another. You get once you're certified, you're certified. It's just an administrative fee. And there are variances on how much some of these certification services cost. So once you have it, just pay the lowest cost to get it. Compare rates, so if you go online and get lists for certifying companies, find out what their fee is. Don't pay $1,000 when you can get it for $200. It doesn't really matter. I mean, once you're certified, the only difference is if for some reason I'm not aware of, if you're going for some government contracts in very specialized fields where a government subcontractor, you're a subcontractor to a major corporation, is asking for a little bit more documentation. But wait until you need that documentation to spend the cash.
But I'm just wondering if the banks, those people really care.
No, because their job is not to second guess. Their job is to move that paperwork right? That's probably, if you have the certification, the paperwork that says you're certified as a woman-owned business, majority-owned, check. If there's something that looks really rinky-dink about the certification company, maybe. But no, just go lowest cost certification company. They're diving in. Notice I didn't put that on this checklist of something that they're going to pay an awful lot of attention to. Great question, though. Great question. FICO scores, there's variances on this. If you're in the 700 range, you're golden. If there was an event in your family life, a medical bill or something like that, explain. My credit rating took a dip because of this, or my spouse lost their job for a short-term thing. Explain it, especially on SBA loans. Not too long ago, I interviewed the top Uber guy for SBA loans from Wells Fargo, and we were talking about this very issue of people especially coming out of the recession. And just explain it. They're reasonable. If it was a sudden dip, talk about how it's been amended. You know, this is your application. Put your best foot forward. Sometimes things happen in life that are completely unrelated to your success and potential as a business owner. Put it down.
This is something that's extremely important to me. I got totally wiped out during the downturn, and that's why I started this business. Mm-hmm. So I'm starting out with a low FICO score and still debt that's still out there. Is that the thing that should be explained at that point, or is there other things to go on with that? Because it's ongoing.
Debt? Is this ongoing business? Now I know you have the factoring relationship for
your
business.
No, this is all personal before I started this business.
Okay. So now, are you looking for new loans for expansion?
I am now, yes.
Okay. So again, we started with, we're going to turn first to the factoring, right? See if we can get a better deal, no matter what, because that'll save you cash.
Right.
But I would not be afraid, especially since, have you been paying your bills?
Yes.
Over the last 12 months?
Ever since everything fell apart. Yeah, started right back up again.
I'd be surprised. Now, here's one thing about FICO. Even though I've mentioned FICO, FICO is not the only credit scoring system in America. Many banks have their own credit scoring system, so something that might look bad on FICO may be entirely different. Every bank has their own formulas. FICO is one service that is used by a lot of banks, but not necessarily the largest banks in America. Usually those larger banks operate on their own scoring systems. SBA lenders do often look at FICO scores, but it doesn't have to be FICO. So in no way will the SBA say, it must be a FICO, you must have this, because different banks, again, can use different scoring services. The fact that that happened 3 or 4 years ago, I would include that in your application and say, back here, this is what happened. You are not the only person in America that suffered a dip. I mean, the real estate developers, you name it, across the country, you're with the majority. But it sounds as though you have come out of it in a very responsible way. And as long as you're demonstrating on the personal side, you know, remember, we're looking at your business credit worthy first. And you've got a strong story where you've generated more customers. The factor has been paid responsibly for 3 years. You're in business. You're not quite at profitability. Maybe we look a little bit about your expense structure, or maybe increasing the cost of what you sell your services at. You may be shortchanging yourself, right? And maybe just a couple of those changes might improve your bottom line. But in no way is the personal relationships should be the reason why you don't pursue growth. When a lender says no, pay more attention to that than what we conjure up in our own brain.